There's now an 89% chance of a rate cut at the September FOMC meeting. We have looming signs of a recession, and the healthcare sector is still dropping. We have a few things that I want to get into today, but first, how can we use our knowledge of rate cuts to profit off of the government and the Federal Reserve's decisions? I'm going to introduce REITs and gold real quick, so if you already know and want to skip ahead, I'll put timestamps in the description. But if you're unfamiliar, rate cuts will make the dollar cheaper to borrow, which will stimulate the economy, but it will also make the dollar weaker and cause inflation to rise. You can profit off of this knowledge by slightly altering your investing strategy. Honestly, rate cuts will cause the market to rise as a whole, so investing in anything is generally a good idea. But the two biggest assets that benefit from rate cuts are REITs and gold. I know I've said this a few times already, so I'll be quick, but gold is used as a hedge against inflation by everyone, and it's been on a meteoric rise for the last couple of years. You can buy the GLD ETF that tracks its price, or you can buy physical gold. Costco sells it by the ounce. I've been excited to talk about REITs because I don't have that much of my portfolio allocated to them, but I have been wanting to add to my positions, and right now seems like a really good time. REITs are positively impacted by rate cuts in two major ways. One, when borrowing is cheaper, many companies can refinance loans for lower rates and put more cash into their pockets, which they can in turn use for more acquisitions. But number two, aside from this, many investors like their high yields, which can sometimes be more than bonds. Now, this all sounds well and good, but what if we really are going to enter a recession? Now, I'm not trying to be like Ray Dalio, but there are a few signs, a couple of these being the real money supply flattening and unemployment rising. I'll link some great videos with more information on this. But if we enter a recession, this will cause the market to tank as well as REITs, even if rates get cut. And there are a few things that you could do, but first I want to highlight something Joseph Carlson once said. He made a video where he talked about Ray Dalio and compared him to Tom Lee. Ray Dalio is famous for trying to predict recessions and constantly telling people to sell, and he's wrong 80% of the time. Tom Lee is pretty much the inverse. He may sound repetitive about continuing to tell people to just buy, but that ends up being true about 80% of the time. The market is designed to continue upward, even if there are some rough patches. If you continue to buy, at some point you will come out ahead. With that being said, I have three ideas for facing a recession. You can continue to buy gold. In my opinion, that's never a bad idea. You can also focus on recession resilient stocks. The biggest one that comes to my mind is Waste Management, and it's actually a stock I plan on adding to in the coming weeks. The third option is actually one I just found out about from Financial Freedom 101, and one of the videos I linked is actually his, but it's an ETF called UVXY. This is an ETF that tracks the VIX, which is the volatility index for the stock market. The VIX moves really fast and will spike when there's a lot of fear in the market. Because of this, I wouldn't put too much money into it, but you can allocate a small portion of your capital to this as just a hedge. And I can't talk about my experience with it because I've never used it before, but Financial Freedom 101 said he gained about 500% in his position during the COVID sell-off. Again, I wouldn't allocate too much of your portfolio to this. You can just use it as a hedge. So what am I doing to prepare for all of this? Let's move over to Qualtrim so I can talk about some of my positions and plans. Like I said earlier, I plan on adding to my waste management position. I really like this company, but I haven't focused on it too much because right now I prefer companies with a higher dividend growth rate. But seeing as this is a really high quality, recession resilient company, I'm going to be adding more shares. Earlier, I also said that I only have a small portion of my money in REITs, with Realty Income and Vici Properties being a combined total of 3.06%. I'm going to add to both of these positions, but because of the recession signs, I'm going to go about it in a slower manner that I'm comfortable with. I get paid in a few days, and I plan on buying 2 to 3 shares of Realty Income, and I'm going to prioritize that over Vici simply because if we do enter a recession, I think that it won't perform nearly as good. As far as gold and UVXY go, I'm not putting too much focus on them because of where I'm at in life. I can afford to take risks, but I am keeping them in the back of my mind. That brings me to the final topic of this video, the healthcare sector. The healthcare sector as a whole has been dropping, and my two positions from this sector are United Healthcare and Novo Nordisk, with Novo Nordisk making up about 6.5% of my portfolio, and United Healthcare making up about 7.2% of my portfolio. Despite wanting to capitalize on rate cuts, I still plan on buying a share of United Healthcare when I get paid because I personally believe that a lot of the problems have been overblown, and I think there's a lot of upside aside from it being just a great dividend growth company. And then there's Novo Nordisk. There's a lot of stuff that I really like about Novo Nordisk, but it has been facing some problems recently. One of the major ones is that companies have just been making cheaper and more harmful products, which the FDA has actually cracked down upon. But I guess to summarize, they've just had competitors. Now, they have an earnings coming up tomorrow on Wednesday, and Qualtrim actually highlights some things to look out for, but it states that we should watch how quickly people are coming back to their drugs as opposed to others since the FDA has started cracking down on this. And a couple other things that it highlights are supply chain issues and the impact of some of their recent partnerships, most notably CVS. So we'll be looking forward to that in the coming days. I will make a more in-depth video on those two healthcare stocks after Novo's earnings, but I just wanted to share that in this video. Other than that, I hope you got something out of this. If you did, consider leaving a comment, consider subscribing. I would really appreciate it. Good luck on your investing journey.